Welcome to RP Data's update on housing market conditions for July 2014, brought to you on behalf of National Australia Bank. Over the June quarter, we saw dwelling values slip by 0.2%, the first quarter-on-quarter fall since May of last year. Potentially now we are starting to see the housing market move back to a more sustainable level of growth. Australia's capital city housing market staged a partial bounce back in June with a 1.4% increase in dwelling values, taking the quarterly change to a virtually flat result of negative 0.2%. The trend across housing markets appears to be that the rate of capital gain is cooling across the combined capital cities after the quarterly rate of growth peaked in August last year at 4%. The latest figures show that over the financial year, the rate of capital gain only just made double digits, with our combined capital cities index recording a 10.1% increase. Most of the gains were focused within the Sydney housing market, where dwelling values have surged 15.4% higher over the financial year. In fact, Sydney was the only market where dwelling values increased by more than 10% over the year. Melbourne's housing market was just shy of double-digit growth, recording a 9.7% capital gain over the financial year, followed by Brisbane, where values were 7% higher. Darwin and Perth values were up 5.7% and 5.2% respectively over the year, while the rate of capital gain in Canberra, Adelaide and Hobart was sub 3% over the financial year. The fact that combined capital city home values rose by more than 10% over the financial year really highlights the significant influence of the Sydney housing market. The June data also marks the 2-year anniversary since the housing market growth cycle commenced back in June 2012. Since that time, we've seen a cumulative 15.5% capital gain across our combined capital cities index. Once again, the Sydney housing market has been the main driver of the strong growth conditions, with housing values up 23.1% over the cycle to date. Darwin and Perth have also recorded a substantial capital gain after commencing the growth cycle much earlier than most other capital cities. Darwin has seen a 17.1% capital gain, while values are up a total of 15.2% across Perth. The only other city to record a total increase of more than 10% over the current cycle has been Melbourne, where values are up 14.2%. Brisbane values are up 8.8% over the current cycle, Hobart by 8.7%, Canberra by 6.4%, and Adelaide values are up by 5.6%. While the trend rate of growth is slowing, the question on everyone's lips is where to from here. The vast majority of indicators still remain healthy. Auction clearance rates have slipped from their early 2014 highs, but are still tracking around the mid to high 60% mark, which is a strong result. Average selling time and levels of vendor discounting have recently shown a rise, but are also still at levels which are stronger than the historical average. The typical capital city home is now taking 42 days to sell compared with 49 days a year ago. The average level of discounting from the initial asking price to the contract price shifted to 5.8% compared with a 6% level of discounting a year ago. The latest vendor metric figures suggest that buyers are slowly getting back some leverage, although the marketplace is still broadly in favour of sellers. Stock levels have been trending lower, which means prospective buyers have less stock to choose from. Capital city listings are now 7% lower than a year ago, and the slowdown in listing numbers can be attributed to seasonal factors, with new listing numbers likely to ramp up in line with the spring selling season. Melbourne's housing market has recorded the second highest capital gain over the financial year, with dwelling values up 9.4%. Over the first half of the year, Melbourne dwelling values have moved 2.9% higher, a substantial slowdown from the frothy conditions of the previous growth cycle, where the rolling 6-monthly rate of capital gain peaked at 12.2% in November 2009. Melbourne's long-term rate of growth has been much stronger than Sydney's, with dwelling values rising by 5.8% year-on-year over the past decade. The strong capital gain conditions haven't been accompanied by a surge in rents. The consequence is a severe compression of rental yields. The typical Melbourne house is now yielding just 3.4% gross, and units are providing a slightly higher 4.3% gross yield. Overall, housing market conditions have been diverse from city to city and region to region. It's our view that the rate of capital gains will continue to taper over the second half of 2014. Perth and Canberra have already moved through the peak of their growth cycle, while Melbourne and Sydney are also likely to have recently moved through the peak of their cycle. The capital city markets to watch are likely to be Brisbane and Hobart, where growth conditions have been comparatively sedate to date, and rental yields are much healthier and affordability hurdles are much less of an issue. Interest rates are set to remain low for the foreseeable future, which should provide some level of support for housing market demand. However, growing affordability constraints in the nation's 2 largest capital cities, Sydney and Melbourne, are likely to gradually affect demand. Additionally, low rental yields in these cities may act as a disincentive for prospective investors going forward. Additionally, it's looking like consumer confidence isn't going to stage a post-budget bounce back, which suggests transaction numbers are likely to drift lower. There's a strong historical correlation between confidence levels and buyer activity, with consumer confidence readings now indicating attitudes have turned pessimistic since the federal budget. If we don't see an uplift, we can expect transaction numbers to follow the curve set by consumer confidence readings. Once again, thanks for tuning into RP Data's Housing Market Update. For more housing market information, tune into our mid-month market update. Additionally, you can visit our research blog and other housing market statistics at www.rpdata.com.